Welcome back to the Michael Brooks Show. It's a great honor and pleasure as always to introduce Dr. Richard Wolff. He's our friend. He's a host of Economic Update, Democracy at Work, supported at Patreon. He's also author of this fantastic new book, Understanding Socialism, which you should order. And maybe, frankly, this is one I would, if you have the means, maybe order for some, friends and family. They can have some understanding of this word. But before we do anything else, you ready to sit in judgment of David Griscom? Wait, is Dr. Wolff up? Uh-oh. David, are you sabotaging Dr. Wolff's mic? You want to piss him off?
Well, I heard David. He was coming at me.
All right.
Okay.
All right. Well, Dr. Wolff, you ready to sit in judgment of David Griscom?
Now that the Weinstein case is over in New York.
Jesus
Whoa. I did not want to escalate the joke like that. Oh, speaking of which, I guess we should. I just saw that before we got on air. Weinstein. Goodbye. I only noticed, by the way, when he was walking out of the courtroom that all of a sudden his walker apparently wasn't needed anymore.
Yeah, that was interesting.
Fucking
F
pig.
this. I just throw it.
Yeah. Fine. All right, David, what do we have?
Yeah, so there's a really interesting report in the New York Times.
No music. Let's just do
We're just gonna give a stab.
Actually, could you do we should do the music we did for Elizabeth Warren later.
Oh God. Yeah. So this is just something that's been going on over the past couple of months that we definitely need to be paying more attention to. A lot of times when we're talking about like political economy of the United States, one of the big stories that people are interested in is like all this movement with these tech companies like Uber and Lyft, Airbnb, etc. Well, over the past couple of months, there's been a real shift in the prospects of those corporations, especially new tech startups. So companies like Wayfair, 23andMe, and others have been letting significant amounts of their employees go over the past couple of months. So the New York Times reported that over 30 tech startups have cut over 8,000 jobs in just the past 4 months. I know Wayfair, they let like around 500 people go on Valentine's Day. These are for the most part, these companies, especially some of these ones like Wayfair, which are trying to take up the space. They were trying to be like the Amazon of furniture sales. So they end up having.
They help get furniture to ICE detention centers.
Oh yeah. I mean, like these, there's a significant amount of people employed by these organizations. So these kind of cuts, are very worrying for obviously a lot of people, especially people in Boston where, Wayfair was a big employer. But this has been coming also in the light of a slowdown in investment for these tech startups. So you're starting to see people who have, been, growing a lot over the past couple of years. They're starting to now come down with cuts to their employees, but then also with, reductions in how they're paying people, reductions to people's benefits. So you're seeing this like part of the U.S. economy, which for so long has been, this vibrant part of, the American economy. It's like the tech driven growth, which, first of all, did not touch that many people. Tech's very good at sort of keeping profits going to a few folks, and not something that is really trickling down to the average person. But even in those organizations, we're actually starting to see like a very significant tightening. So you look at what happened with SoftBank, which is like primarily when you're talking about organizations like Uber and specifically with WeWork, their $100 billion vision fund has been pushing a lot of these corporations that had no path to profitability. It was very clear that they, like, I'm sure everyone knows by now about how ridiculous the WeWork's entire business model was and how fanciful it was fundamentally. And this is something that's just been propped up by this massive investment organization. So you're seeing all this movement and all this kind of like, tech is something that has like so much overconfidence, especially like Silicon Valley organizations. And you've been seeing these narratives like, oh, we are in the future now, everything's changing. And now we're starting to see, as people start to get a little bit more worried about the future, that all of these investments are starting to tighten up, and this belief that we've entered into this new kind of economy is starting to dwindle. So SoftBank's lost $2 billion just in the last quarter of 2019. So you're going to see a lot of these tech companies that people have been, highlighting as like the great hope of the American economy, they're going to start tightening. and let's not forget too, corporations like Airbnb and Uber and a lot of these corporations, they're not really like fundamentally changing the economy. They're just finding ways to put the losses on other people. Right. Airbnb does that by making property owners, take the damages that go into their apartments over wear and tear. Uber, people are driving miles and miles and miles on those cars, so those cars depreciate in value. And instead of Uber owning those cars, now it's just their drivers who are owning those cars. So that's really what this innovation has been ways to offload the cost of doing business onto average people, and has been, finding ways to just suck up lots of investment money. And if we start to see that investment money, dry up, we'll be seeing a lot of problems. And I just wanted to hit this because when we're talking about the Uberization of the American economy, it's important that we don't get caught up in these kind of fanciful narratives where we're forgetting what the actual reality is that the reason that workers in this country are so devastated and that wages haven't gone up is because of a power dynamic. It's not because of technology in and of itself. And if we get into this trap of thinking that technology is what is creating the fundamental problem for American workers, then we'll get into solutions like, for example, the Andrew Yang campaign that don't want to go to the heart of the problem, which is the fact that capitalists have so much power in our society and the working class has been beaten down. And we need to empower workers, and that's how we're going to get into a better situation for everybody. That's how we're going to be able to beat back this really horrendous system that we've been seeing.
So, Professor Wolff, I thought it was a strong performance. I've been feeling increasingly bullish on the Griscom segments. So first, your grade, and secondly, can you actually connect all with the less shtick part? I mean, what does this phase of the economy we're in tell us about the limits of where capitalism even has to grow in its own terms?
Well, I think the report is very, very good. All I would do is add a little bit more to it. And that's not a criticism because you can't do everything. You have a limited amount of time. And focusing in on the investment pace, if you like, in this business and how it puts at risk tens of thousands of workers is a good place to focus. So what I would like to do is give it a little bit more context within the broader capitalist system. And it starts with the fact that we now have a capitalism that has gone really to an extraordinary extreme of inequality. We've literally erased everything that was done to compress the distribution, to make us less unequal, that was started in the 1930s and continued into the 1940s, the New Deal and all of that. We have now basically undone that. If you look at the distribution of wealth and income, we're back to the 19th century. We've eradicated whatever the 20th century in the middle was able to do. And that has enormous consequences. It's not just a moral question that a few people are very rich and an awful lot of people are squeezed. I mean, that's an important moral issue, and everything is justified about bringing it up. But I want to talk a little bit about the consequences and show how it connects to your point. When the mass of people are squeezed, they can't, if their wages are stagnant, which we know they have been, real wages, they can't buy a growing quantity of goods and services, especially after 30 years of loading up on debts they can't increase the way they once could when it was new to be in debt on this scale. We have the mortgage debt, we have the automobile debt, we have the credit card debt, and we have now the student debt. It's an incredible overload of indebtedness. So to make a long story short, the mass of people cannot buy an increasing output of goods and services. And what that does is it presents the small group who have all the wealth, it prevents them from making any kind of profit from producing more for the mass of people. It's not there. They're not going to be able to justify it or to do it, or if they proceed anyway, they're not going to make any money because they can't offload the stuff they could have invested in building more of. So they become desperate for where to put the money. And they become very vulnerable to what? To an age-old capitalist game, the bubble. Somebody comes along and says, oh, I know you're squeezed, you haven't got here's where it is. whatever it is. It was the dot-com bubble, then it was the real estate bubble. If you go back, there's the automobile bubble and the electricity bubble and the modern chemistry bubble. I mean, it never stops. And so now you have just the latest incarnation, the high-tech bubble. We're going to use the computer to revolutionize every aspect of life, making a fortune. And remember, the folks who have a lot of money, they're not there because they're smart. I mean, they would like us to think it, but they're not. An afternoon with Michael Bloomberg, you'll get it. An afternoon with Donald Trump, you'll get it again. I went to school with people all of those people, or their children, and there's nothing. I mean, that story is ridiculous. So they're very vulnerable, and they're looking for some way to make money. One of the reasons you've seen the run up in the stock market is that's a bubble. That's a place to go where the money can quickly make more money because they're not producing anything. They're simply buying and selling from each other in a game in which everybody wants to make more money. Everyone's desperate. So playing the stock market is like playing high tech. And that the story always ends the same way. You keep doing it, you keep doing it, and then one day it begins to show that in this company or in that sector, it's not paying off. You're not and then the anxiety, then the reverse goes in, and everybody's freaked out that they've invested everything in WeWork as the latest hotshot, and there's nothing there.
Does it strike
the anxiety, and then as everybody pulls out, of course, the cards fall because it's the flip side of the up bubble. It's the burst bubble, and you're beginning to see now, and the danger of these numbers, like the 8,000 that got jobs, is not in that. That's a tragedy for those people and the families and communities. Again, an important issue. But the real risk is when does the trigger happen that those numbers begin to be circulated and all the other people who've poured their investments into this hustle begin to withdraw. If you take a look at today's stock market, if literally there you see the panic begin to go nuts. Now, it's claimed it's a panic about the virus.
Corona.
I doubt that it's just that. It's always many things. But one of them is the lurking anxiety. We're in a bubble, and I don't want to be the one caught when it bursts.
Is there a relevance to, there's the historical process you've just described, and it happens in every type and phase of capitalism. However, if you're starting a company at the beginning of, the automobile boom, or you're going to go overseas and exploit oil or natural resources, or for that matter, today, okay? Or you're going to say, all right, we're about to have a giant middle class in the United States, and people are going to wash dishwashers, so we're going to make them, and we're going to have, So yes, there's bubbles, and yes, it's not durable because of the broader problems of capitalism. But those things do make a lot of sense on a very intuitive level, which is, okay, millions of people are going to want to buy a dishwasher or a car. When we start getting to the phase where SoftBank is putting an enormous amount of capital into a company that you can really dig into, I mean, honestly, you can really go into it. And it's like, well, we have a common meeting space, and people go and they bring their laptops, and we have coffee for them. Now, even within that, you could spin look, you own New York and San Francisco real estate. That's capital. And in fact, in the way the economy works today, there are people who want to buy, membership. I mean, Soho House on completely the opposite end, actually, I would doubt they're a publicly traded company. That works. They're very profitable. They provide a hugely swanky upscale experience for people who want that. Okay, that's a real business. But when you start, but WeWork, the comedy of it is that there's no part that you can ever look at where anybody could have actually thought to themselves that this would in any way ever bring billions of dollars back on returns. But ever. So what does that say about the phase of capitalist exhaustion now, that we're not even at the gadget phase? We're at this isn't really a meeting space company, man. It's something else. I'll take a $5 billion equity on it.
I think it's the same model all the time. In other words, for these bubbles to start, there has to be something real. There has to be some story in which Joe Blow or Mary Smith came up with something, maybe a new technology, maybe a new business. Usually it's less the technology and less a new business than it is a rerun of the old hustle. And I'll give you an example with Uber in a minute about that. But they start with something that makes money. You have to have that so you have something to point to. Then every hustler and his brother and sister arrive and say, see what Jeff Bezos did with Amazon? I can do that with furniture, or I can do that with, dental floss for your dog. It doesn't really matter. It's
now you're just making fun of podcast advertising.
And basically, if you look at their advertising, it's get in on the ground floor of X because you could have in the Y. Everybody knows what happened with Y, so they want to be, especially when there's nothing else to play with, this becomes the attraction. What I said before, I would even want. Well, anyway, let me finish that story. So that's what every bubble is. You can point to a beginning. You can point to a set of investments that did real well because of something. We'll look at it in a minute what the something was. Maybe a new technology, maybe a new product, probably a new rerun of an old hustle, as with Uber. But whatever it was, it made a lot of money, and that brings in the hustle. That's why the parallels are so similar, whether it's tulips, in the 18th century, the tulip mania, it started with tulips being a very attractive flower that no one had ever seen before, and you could grow these bulbs, and it didn't cost much, and people would pay a fortune to have this beautiful, colorful flower. In other words, it started, and then everybody and his brother came in and told you how much money you could make. And if you have concentrated wealth, it doesn't take that many dumb people to be hustled for you to get the bubble, and then it just builds on itself. Let me give you an example of Uber, because it has nothing to do with technology, basically. It has nothing to do with a new business either. It's an old business. I'm going to exaggerate, but to make the point. All Uber is the attempt to get around the social arrangements for taxis. When the taxi business starts, which is a century ago, before even there were automobiles, you had basically the taxi idea was with horse and carriage too. The idea was very simple. Use one set of vehicles to transport lots of people. So the vehicle doesn't sit in the garage 24 hours a day waiting for you to take a ride, because that's really inefficient. It's like the difference between a single-family home and an apartment building. It's much more efficient to live in an apartment building. All right. So what happens right away is that capitalists get involved. They want to make money off of the taxi business, whoever developed it. And so what do? They try to jack up the price, and they try to cut corners on the cost. And the end result is you have accidents because they didn't maintain the carriage. You have accidents because they didn't maintain the horse, or they didn't maintain the car, or they scrimped on the insurance, and you get injury, pain, loss. And after a certain point, it becomes too dangerous to use the cab, and yet people need the cab. And so the resolution, private capitalism is a bust. That's what happens. And you call in the government, which is what always happens, to fix it. In comes the government and works out a deal, which they're supposed to. They have a taxi and limousine commission, as here in New York. Here's what it does. It says to the companies, okay, we can't have a taxi business where people take their life in their hands when they get in the cab. So you have to have insurance, and we're going to check you. You have to have maintenance, and we're going to check you. You have to vet the driver. You have to make sure she isn't a drunk and hasn't been in jail and doesn't, assault people and all the rest of it. And that's expensive. You have to do all these things. So here's what we're going to do. We're going to set rates to compensate you at a reasonable rate of profit for all the expenses, and then we'll have a functioning taxi system. We've taken care of the costs. We've made sure there's an incentive plus punishment if you don't maintain the cab, but shut up and do it, because we're going to give you 8% a year rate of return with the pricing of the cab. The cab ride becomes more expensive, but the public is comforted. The poor can't take cabs. They never could, except when their life is at stake or the baby's about to be born. It's a convenience for people with better means, but it works. We have a taxi industry. In comes Uber and says, whoa, if I can charge the same price that they've set up, but I don't pay the costs. I don't maintain the insurance. I don't maintain the... Oh, I can make a fortune because I'm riding off of what was accomplished to solve a problem by reintroducing the very problem that the commission was brought in to solve, which is what Uber did. That's why we have all the scandal about Uber not maintaining insurance, Uber not maintaining, or forcing their drivers to, in this case, or maintain the thing, or you get the picture. And when that isn't enough, when they're forced by public opinion, they start squeezing the drivers and cutting. I mean, it is ridiculous. It's a rerun of a bad old movie. And the end result will be, sooner or later, to bring Uber under the commission, just like everybody else. And then the whole distinction will dissolve because cab companies can have the same software to run the business as Uber or Lyft already do. And we've just watched the capitalist game rerun.
Well, there it is, folks. You just watched a Michael Brooks show video. Subscribe to get them all. Why wouldn't you? Don't be foolish. Click subscribe below and become a patron as well. Patreon.com/TMBS. Thanks, everybody.